Welcome to BigONE Weekly News Update. I'm Sophia. The second week of October 2025 proved to be one of the most turbulent periods in recent memory for global markets. From record highs in Bitcoin to a historic liquidation cascade, and from renewed tariff threats to mounting investor anxiety, financial markets faced a perfect storm of fear and speculation. Crypto market whiplash, record highs to historic liquidations. The cryptocurrency market opened the week strong as Bitcoin, BTC, surged to an all-time high of $126,000 on Monday. However, optimism was short-lived. By early Saturday morning, panic swept through the market after a sharp sell-off pushed BTC to an intraday low of $102,000 on Binance, triggering widespread liquidations totaling $19.5 billion across more than 1.6 million futures accounts, the largest such event in history. BTC ended the week down nearly 7% at around $115,070, while Ethereum, ETH, fell 8% to $4,150. Against the tide, Binance Coin, BNB, surged 11.5% to reach a new high of $1,300. Tariffs trigger panic. Trump's announcement sends shockwaves. On Friday, U.S. equities experienced a sharp sell-off after former President Donald Trump announced via Truth Social that he planned to dramatically raise tariffs on China in a retaliatory move. The S&P 500 dropped nearly 3%, the Nasdaq lost more than 3%, and the Dow Jones fell for 5 consecutive sessions, each posting their steepest weekly losses in 6 months. Following market close, Trump made the policy official: a 100% tariff increase on Chinese imports effective November 1, 2025. With global markets shuttered for the weekend, investors turned to cryptocurrencies, the only assets trading 24/7, to adjust their portfolios. The result was an overnight crypto sell-off as traders liquidated positions to free up capital and hedge against Monday's expected equity decline, a cascade of liquidations and depegging crises. The sudden sell-off triggered 2 waves of violent liquidations across digital assets. Bitcoin fell nearly 16% to $102,000, while Ethereum plunged more than 20% to $3,435. Many altcoins, plagued by thin liquidity, collapsed under leverage and panic selling, with some briefly dropping to zero. Compounding the chaos, Binance experienced technical issues tied to misconfigured withdrawal fees, causing several wrapped tokens such as USDE, WBETH, and BNSOL to lose their pegs. This led to forced liquidations of whale accounts that had used these assets as collateral, amplifying losses throughout the derivatives and lending markets. The fallout resembled a brutal wealth reshuffle, as leverage unwound violently across decentralized finance, DeFi, platforms. BTC holds up better than altcoins. Although the crash, dubbed the 1011 event, was sparked by Trump's tariff post, Bitcoin's drop was moderate compared with past sell-offs such as 519, with $9.3 billion liquidated, or 312, with $3 billion liquidated, both of which saw BTC plunging more than 30%. ETH liquidations totaled about $4 billion, nearly matching BTC's $5 billion, despite its smaller market capitalization, highlighting how recursive lending within DeFi sharply amplified Ethereum's risk exposure. The on-chain exchange Hyperliquid accounted for over 50% of total liquidations, underscoring how high leverage and cross-margin mechanisms among low-equity traders magnified contagion. The markets, calm as officials, seek to reassure. By Sunday, cooling rhetoric from Chinese officials, U.S. Vice President Vance, and Trump himself helped ease investor anxiety. Binance pledged over $200 million in compensation to users whose lending positions had been forcibly liquidated based on their liquidation prices. This intervention, combined with calmer sentiment, sparked rebounds in major cryptocurrencies such as ETH and Solana, SOL. Tariff war redux. Panic, but not 2024 level fear. While the new tariffs rattled global markets, the reaction was more measured than the panic seen in early April. Back then, the VIX Volatility Index spiked above 30 and remained elevated for 13 straight sessions, peaking near 50 during April 7th to 8th. In contrast, the latest spike saw the BigONE rise only from 16.4 to 21.6. Analysts attribute the difference to familiarity. Unlike April's broad-based tariff escalation that blindsided investors across multiple economies, the current conflict remains a US-China standoff, largely seen as a negotiating tactic rather than a full-blown trade war. The market's response reflects fatigue, an expectation that business as usual will resume soon. The week ahead, eyes on data and earnings. Looking forward, investors will monitor a series of key macroeconomic releases: US CPI and core CPI, US PPI and retail sales, China's CPI pending. Major financial institutions, including JP Morgan, JPM, Goldman Sachs, GS, BlackRock, BLK, and Taiwan Semiconductor, TSM, are also set to report earnings. Meanwhile, the SEC faces critical deadlines for potential spot ETF approvals for XRP and Dogecoin, developments that could further sway crypto sentiment. TACO or Black Friday. As the world awaits the U.S. market's Monday open, traders brace for another volatile session. While short-term swings may intensify, most expect the broader trajectory of US-China negotiations to stay intact. Still, investors are clinging to a familiar hope known on trading desks as the taco trade, short for Trump always chickens out, a bet that political brinkmanship will end, as always, with compromise. Join BigONE today and take advantage of the growing cryptocurrency market.